Hello guys, welcome to Stockies. Today we are going to talk about Reliance Industries and Future Group. Recently Reliance Industries and Future Group has been in news. Reliance Industry has acquired Future Group for Rs 24,713 crore. According to a Bloomberg article, Reliance Industry paid huge premium to buy Future Group. It means Reliance paid much more than the fair price of the Future Group. But why? Why did Reliance bought Future Group by paying such huge amount? Was it a mistake or masterstroke? Let's find out. To understand this, first we need to see Reliance Industries' past acquisitions, which are Rediseas, Eros International, Hamleys, Sawan, Tesseract, Den Network, Alok Industries, Balaji, Imbibe, Hathway Cable, and Netmates. These are few of the Reliance Industries acquisition in past few years. This shows us that Reliance is trying to diversify its business. After Reliance became market leader in telecom sector in 2019, it started focusing on retail and e-commerce sectors. If you haven't watched our video on telecom sector, then I highly recommend you to watch it to know how Reliance became market leader in telecom sector. The link is in the description below and also you can click the I button. Let's get back to our topic. If you look closely here, out of all these acquisitions, two of them are really made for each other. That is Alok Industries and Future Group. Alok Industries' main business is cloth manufacturing and Future Group's one of the main business is cloth selling. So it means Alok Industries can manufacture cloths and Future Group can sell it in the market as it has strong market presence through its brands. This is how this Future Group acquisition made by Reliance is a smart move. Another reason for buying Future Group is that it has well-established popular brands such as Food Bazaar, John Miller, Easy Days, Lee Cooper, Big Bazaar, Heritage Fresh, Food Hall, Town Hall, FBB, Hypercity, and Brand Factory are some of the popular brands owned by Future Group. Future Group also has a strong market presence. According to Future Group's official website, Future Group had more than 600 million customer visits. It is also third largest retailer in the country with over 1,800 Future Group stores in 400 plus cities covering over 24 million square feet of area. Currently, Walmart is a market leader in retail sector and this acquisition will help Reliance to compete with Amazon and Walmart. So now we know that Future Group has a strong market presence and popular brands. Then why did Future Group had to sell its business to Reliance? Let us see why. There are mainly 7 reasons. We will look at them one by one. Increasing debt. In 2012, Future Group's one of the popular brand that is Pantaloon was sold to Aditya Birla Group for Rs 1,600 crore to pay off Future Group's debt. In March 2019, Future Group had a debt of 10,951 crore and 6 months later, its debt increased to 12,778 crore and as of now, its debt is 12,989 crore. Promoters has also pledged almost all of their shares. On 24th August 2020, company also paid 100 crore on its foreign bonds to avoid default. Rating downgraded. Due to weak financial position, in March 2020, ICRA, one of the most reliable rating agency, downgraded Future Group. Falling stock prices. Since last few years, Future Group stocks has been falling drastically and has plunged over more than 70%. Increasing cost. In 2019, one of the Future Group's brand, Easy Days, had to close 100 plus stores to trim cost. There are some positive reasons as well, like premium value. Future Group got paid higher premium value as compared to their market price. Hope for investors. Since Reliance was in talk to buy Future Group, its stock prices started increasing due to optimism of investors. Past few months, the price has increased over 155%. So in my opinion, this acquisition is good for both of them. Reliance as well as Future Group. On one hand, we have Reliance, which is cash rich, looking for expansion. On the other hand, we have Future Group, which is well established but struggling with finance. So it's a win-win situation for both of them. For more videos on investment and finance, please subscribe this channel by clicking the subscribe icon below. And if you like this video, don't forget to hit the like button. Thanks for watching.